The oil market jitters are slightly calming down, but the oil quotes are still struggling to stabilize. It seems that Russia has refused to support the additional output cuts proposed by the OPEC because the shale oil production in the US is constantly increasing and reaching its historical highs. However, the response of Saudi Arabia is also quite reasonable as it seeks to maintain leadership in the oil market. By starting the price war, Riyadh hopes to make Russia return back to the negotiations. However, the outcome of the conflict between Russia and Saudi Arabia is hard to predict. On Monday morning, Brent crude stopped its rapid decline. Today, oil is on track to recovery, with Brent consolidating in the range between 35 and 37 US dollars a barrel. Analysts expect that the crash in oil prices will encourage Russia to resume talks with the OPEC and allies, since the country's budget is strongly dependent on oil revenue. In order to maintain the expected revenue, Russia will need to increase oil sales volume and sell it at a lower price. However, the global energy demand has recently dropped amid coronavirus outbreak, which means that Russia is likely to face hard times very soon. Probably Russian authorities hope that American shale oil producers will lose ground as the market will be oversupplied. At this point, the upward correction is likely to reverse. Meanwhile, oil quotes managed to win back just 7% of their losses following 25% plunge during the previous session. Currently, WTI is trying to break through the level of 34 US dollars per barrel. The ruble edged slightly higher on Tuesday, gaining 4% after having lost 9.5% a day earlier. The ruble was supported by the country's central bank, which decided to halt foreign currency purchases for the next 30 days. While oil has lost almost 20% of its value, the Russian currency was down by only 5%. Analysts expect the dollar-ruble pair to trade in the range between 69 and 70 by the end of this week.